Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading Corporation. If you are brand new to our podcast, The Secret War on Cash, welcome. And if you've been tuned in with us before, welcome back. I apologize for a little bit of the hoarseness in my voice right now. I think they say it's allergies that we have in the Valley of the Sun due to all the rain we recently had. I have with me my co-host, Chris Agelastos. Chris, good morning to you today.
Good morning.
And let's see here. Let's talk about what's been happening in the markets, especially as it relates to gold. The first article here from Bloomberg that CC just put up, gold climbs to near $4,000 an ounce as the US government shutdown continues. And we talked about this recently, the government shutdown, and
Yeah.
this is not a new or foreign thing as it relates to what our government has to do when you can't get the Republicans and the Democrats to agree on funding and finances and things of that nature, and so they shut down, and then they come to some kind of agreement and kind of get things going again. In the crosshairs of this, or related to this, as this article talks about, gold climbs near $4,000 an ounce. Now, the reason I wanted to talk about this is because what's interesting, gold is this shutdown has just started taking place, like with this discussion within the last several weeks. And the bottom line is gold had already been on a tear or has already been on a tear. And to me, I think the one of the more important takeaways with this article here is it just speaks to the fact that as you look at how gold has performing and what's causing it to perform, literally every day it seems like there's another factor that these analysts or these experts, if you will, are suggesting, hey, this is why gold's moving. And
Yeah.
it has so much support right now, both on a domestic front and a global front. So I this is just yet another reason that people should be invested in gold right now, correct?
Yeah, absolutely. And the government shutdown, I think most people understand this. Really what it is it's both sides arguing about where they want to spend their money and how much they want to spend. It's not really as they typically portray, they're trying to be responsible and cut back on spending. I mean, we know the government has a bad track record when it comes to spending. They are going to spend and print more money and put us in a bigger hole. That's what they've done for a lot of years now. And so I don't that that's not going to change either way. And so that's just one more reason that we see gold prices moving up here. Obviously we're expecting Federal Reserve rate cuts, another one or two this year. And they talk about that in this article. All the options traders are betting on bigger gains. There could be a little bit of a pullback with the gold price, which I kind of hope there is, so that we can buy some at a little bit of a dip. Um, but yeah, absolutely. I mean, there's so many variables pushing gold forward right now. It's not the time to just sit on the sidelines and see what's going to happen next year. I mean, everybody expects this to continue for probably at least the next year or two. I think through most of this administration, and where it goes from there, it's hard to say, but I think 5, 10, 15 years down the road, as people buy and hold, they're going to be very, very happy.
Well, and I agree with you. The 5 and 10 year hold for sure. I think they will be happy as well. And but as you talk about, you hope gold has a little bit of a pullback so you can get in at a little better value. Honestly, I don't think I would be holding my breath or waiting for that to happen if I'm a person looking to get involved in gold. And I say that we've been doing this podcast now for a little over 2 years,
Yeah.
and at Swiss America, we're as a company, we've been around for over 40 years, and we've advocated for those 40 years that, gold is always something you should have in your portfolio because it's just part of a balanced or diversified portfolio with your stocks, your bonds, your mutuals, maybe
Right.
annuities, land, but having that portion in gold. And but going back to, this podcast, as we started talking about this with people and the reasons why you should own gold, because of BRICS, because of de-dollarization, because of the debts, because of the deficits, because of just overall global demand or central banks buying. The bottom line is gold was less than $2,000 an ounce when we started this podcast. And
Yeah.
now we are on the cusp of topping 4,000 an ounce. And
Yeah.
so my point being is if anyone was waiting for a pullback, are there times where yes, it
No.
went to 24 and then back down to 2350, twenty three twenty
Right,
five, or
right.
something to that effect, sure. And there's going to be opportunities for that. But understand, like, now that this 4,000, we started off this year, this calendar year, which is not even, it's barely, we're in our, what, October, so our 10th month, at less than 3,000 an ounce. And now
Yep.
we again are knocking on the door of four. And so
Yeah.
that's why I would encourage anyone who's not already involved in gold, or if you are, or you want to get a little further involved, contact us. Find out a little bit more about some of the options that you have, or some of the things or directions you can take in the gold market. And you can do that by calling us at 1-800-289-2646. You can text us at 1-800-289-2646, or visit us online, Swiss America, www.swissamerica.com. Get some information. The information is free. Ask some questions. And I think, you put yourself in a position to make some good decisions to get that better balance or diversification if you don't already have that. And going into even our second article, and this kind of hits on that actually.
Hmm.
The second article, and this is why I chose this one to talk about here today, Chris. Gold FOMO, FOMO, which is fear of missing out. Gold FOMO could push metal to $4,000 an ounce. And what they're talking about, and I mean, with gold now, I think, as we are talking here today, it's 39.74 or something to that effect. So it's
Yeah.
it's a heartbeat away from 4,000. But the
Yep.
bottom line is that fear of missing out kind of speaks to what you just mentioned, where, if somebody's looking for a pullback, I wouldn't look for that. People, they're saying that people who are afraid of missing out on this move of gold, that is what's going to get people to, start buying again. And as I mentioned just a moment ago, Chris, the bottom line is there's all these factors that keep coming out, that all these analysts that are suggesting this is just yet another thing that's going to help drive gold prices up. And I agree. I think we do see that coming into the marketplace, where now people are like, well, wait a minute, this is something that is for real and it's going to take off. And as it starts getting into 4,000, and maybe then it gets to 5,000, understand, and we've talked about this numerous times, the percentage, that, if you see $1,000 move from here,
Right.
that is only a 25% move. And so these, as the prices get higher, the dollar increases are expected to get higher as well, because the market really, kind of functions, if you will, off percentages more than it does dollars. So I
Yeah.
think this is an excellent point, and I think this is something that can contribute to gold prices moving along as well.
Yeah, and people are going to eventually they're going to get desensitized to seeing this, $100 move. I was talking to this with my wife the other day. It used to be a huge deal when we saw gold move 40, 50, $60 a day. Now almost, an 80, 90, $100 move is really a lower percentage move than $50 an ounce was a few years back. And
Right.
so you're absolutely right. We're going to see these bigger numbers. That's why it's easy to say now, as we knock on the door of 4,000, it's not going to be a big deal to hit 5,000, 6,000, even in this coming year here, because percentage wise, that's exactly what we've seen over the last year or two. So, people are going to realize that. I hope they don't realize it too late. And if they haven't already bought, get into the market. And the way that you get yourself a good deal, if you will, on gold is by buying regularly. Dollar cost averaging. People have heard it for years with their stocks and their mutual funds. If you're buying regularly, and like you said, if the price drops $50 or goes up $50, it doesn't really matter, because over time you're averaging out your purchases, and overall you're going to have a good entry point into the market. So yeah, if people are sitting on the sidelines at this point and haven't at least moved a portion of their savings into gold and silver, they need to get on the ball right away. Or I tell people, look, you can wait, but you're just going to be paying that much more for it. So if you know you want to do it, or you think you want to do it, and you want to learn more, put a plan together, reach out to us, or anybody, quite honestly, now, and start putting the wheels in motion, because the longer you delay, the more you're going to pay.
As people look at $4,000 an ounce gold, the bottom line is they may say, okay, well, that just seems like it's so high. And it is higher than it was, certainly. And it's expected to go even much higher. And sadly, it really, is not just it's not the higher price of gold, that $4,000 an ounce gold, is not to say that gold is just that great, but it's really more a reflection of the fact that our dollars are just doing that poorly, unfortunately.
Yeah.
And the problem there, the problem is that our dollar is doing poorly and probably is going to do even more poorly in the future. But beyond that, the benefit to owning gold is in so much is that this is kind of what's driving the price. This is probably a very realistic expectation as to what what we will see with the price of gold moving forward. So again, if you haven't contacted us to get some free information and our report, incidentally, the Secret War on Cash, please do that. 1-800-289-2646. Text us or call us at that number, or you visit us online as well. Thanks for tuning in. Look forward to talking to you more in the future. Have a great rest of your day, and we'll see you real soon.
Thanks. Take care.